On this month's market update, home sales are falling and inventory is rising. Find out what that means for you.
As inventory continues to rise across the country, we're going to take a deeper look at the varying markets, the specifics, and give you some ideas, strategies, and thoughts on what you may be able to implement in your business based on the data.
Mortgage rates rose above 7% for the second time this year as Treasury rates rose as well. We'll talk about why.
All that and more in this month's market update.
Welcome to the real estate market update. I'm here with my co-host, Gabi. Welcome.
Thanks, Ruben. It's a pleasure to be here. I look forward to many more together.
Yeah, it's going to be great. So first topic, we're just going to talk through some of the NAR stuff to kind of set the stage for the rest of our conversations, right? This month, what we saw, kind of a slow month for home sales, 4 million nationally. That was down about 2% year over year, and down about 0.5% from last month. We saw inventory creeping up, which I think we're going to dive into a little deeper later, but we saw about a 20% year-over-year increase in the number of total listings on the market. We ended at 4.4 months of supply, but prices are still going up, but slowing. We're at 1.8% year-over-year according to NAR. We're seeing a slowing down market a little bit nationally, but we obviously are seeing some variation locally. What are you hearing from people in the field right now?
Well, it's a little bit a mix of two tales, right? Because we're seeing that inventory going up, sales slowing down, and the focus the last couple of years had been to take advantage of any listing that we could get in the real estate as a real estate professional. Yet now here we have all the listings and they aren't selling, right? So it's interesting how the energy shifts from finding a lot of listings to finding buyers that can purchase those listings that are now on the market.
Yeah, and we're going to see it's a little bit different depending on where you are, right? Let's just dive into kind of like what's going on regionally, how agents are dealing with it in different places. So I guess just to kind of set the stage, I think we're dealing with really kind of a couple of different kind of areas when you talk about it. You've kind of got what we might call the SUNBELT and sort of like coastal markets, resort towns, things like that. They're kind of the slowest right now, right? Like they've got the highest inventory levels, sales will slow down the month, and a lot of them prices are actually going backwards. Then you've kind of got other parts of the South where it's a similar story, but maybe not quite as dramatic. But overall, the Gulf Coast in general, we're seeing kind of falling sales, slower price growth or negative price growth potentially, more price reductions in places. As you go north on the East Coast, the market starts to kind of tighten up as you head north. Atlanta's not quite Florida. It's a little bit in between. Once you get to Charlotte, you really start to see lower inventory levels. And then when you really head into like New Jersey, Pennsylvania, is when you really kind of see the tightest markets. As we head into the Midwest, similar story, relatively tight, but not quite what we see in the Northeast. When we looked at the NAR stuff, we can see in their sales data, sales were kind of flat in the Northeast, making it one of, like we could mention, one of the stronger markets. Down 1.2% in the Midwest, down 4.7% in the South, and down 2.9% in the West. You kind of see relative strength compared to across those very big markets. But I think one of the patterns we're seeing overall is, we've got more markets that are emerging into what's basically buyer's market territory, right?
Mm-hmm. Yeah. And with the buyer's market territory come new strategies that, the consumer have to be informed with, because it also means that we have to take a look at the conversations that we are having as real estate professionals with consumers, and the conversations that consumers will want to have answered, because different markets, represent different challenges for buyers and or sellers.
I would say, Naples, we're looking at, a lot of inventory going on the market there. They've added 2 months of supply in the last year. About 43% are having price cuts. Again, other coastal areas, Miami, Fort Lauderdale, 41% of listings on the markets have had price reductions based on our data.
This could be great news for buyers, right? If I'm a buyer and looking in those markets right now, what are my options?
Yeah, that's where a lot of the opportunity is, right? Like if you're a buyer and you're able to, if you have finances, you're in the market, you've got a possibility of getting a good deal right now, and regardless, you have more choices. That's sort of, I think, a big thing right now, right? The challenge sort of lies with you're listing your home right now, like deciding how to do that in the smartest way is a little bit harder in a market where, the houses aren't just flying off.
Yeah, and you want to be really clear, with your real estate agent on what the pricing strategies are, because we do know that, across the country, 30 to 40% of homes that are on the market have had those price adjustments. And how do you compete against that if you are a motivated seller in today's market? Now, on the buy side, you're absolutely right, Ruben. It does open up options for additional inventory that a buyer today can consider taking a look at, knowing that most of the properties are going to go, by most 30 to 40% of them may go through a price adjustment. So it is possible that a buyer could increase the price band in which they had been looking over the last few months because they do have more options now.
So, when we're looking at the picture, kind of moving across the country, we start looking into the Midwest, let's say St. Louis, Louisville. It's a different story. Like, we're seeing, if anything, actually inventory seems to be decreasing a bit there in terms of month supply. They're sitting at 1.7 and 2 months really respectively right now. But an interesting thing there is even there, really about a quarter of listings are experiencing price reductions right now. So even there's some opportunity, and it's kind of interesting that this pricing conversation is coming up even in markets with relatively low inventory levels, with what are essentially sellers markets still. So we're kind of seeing that transition, I think, play out in a lot of places.
Mm-hmm. And it makes us wonder if it's something that has happened because the last few years, sellers were getting top dollars. The story in the field was multiple offers, right? Things were selling high. And are we having the right conversations now, looking at the sold comps and at the data as real estate professionals, to be able to have the conversation that the market is different now and that we're pricing accordingly right out of the gate?
Let's round out a little bit our regional conversation, right? So let's cover the West Coast. When we look at those markets, LA, San Francisco, Seattle, we're seeing, again, these are more kind of like lower inventory markets. We've seen inventory start to rise there, but not as quickly as the South. We kind of have a situation where there's really kind of, I would say, two markets. There's really probably one in the middle. There's really more like three situations to some extent, but for simplicity, we can say two. We've got a lot of the SUNBELT, highlighted specifically by more kind of vacation areas, but also, places like Austin, where you've got kind of have gone through a period already of rapidly increasing inventory. In some of these places, it's up even this year by 40+%. Some of them are seeing price reductions on as many as half of the listings in their markets. So you've got this really hard transition into what's starting to become a buyer's market in these places. That's mostly in the South. In the Northeast, we've got really is still a pretty strong seller's market, well down a lot of the East Coast. Even when you get into the Carolinas and a lot of places, particularly the more urban areas, you're still fairly strongly in a seller's market. Midwest, again, maybe in the middle, kind of transitioning in some places, but still very low inventory in some places. In the West, again, probably a little bit kind of in that middle ground where we're seeing increased inventory, but we're also seeing things slow down a little bit in general. But their inventory levels overall are still relatively low. We talked about kind of two different markets, but I think for the most part, people are familiar with the seller's market situation already. But this buyer's market's a little bit newer. We've talked about strategies. So what do you think, from both a seller's perspective and then maybe a little bit from a buyer's perspective too? Like, what does this buyer's market mean now?
Yeah, well, we came out of a couple of years of strong sellers markets across the country. And what ended up happening is in a seller's market, when you are getting your property listed on the market, that you maybe looking at your range of comps, and during those times you might have been able to come in at the very top of the comps and still get that list price, right? That may no longer be the luxury for someone wanting to list their property now, as opposed to now where we are, in a buyer's market in a lot of places across the country, where you are going to want to take a look at your sold comps and potentially those days on market as well, to take a look at a couple of factors. We're no longer pricing at the outermost ranges of what the comps can bear. We are now aggressively pricing right, meaning that we may want to take a look at the competition and price on the lower side of the range, because worst case scenario is that it was so aggressive that it would still yield multiple offers, yet we know the reality is that it's no longer happening across the country. So we know that, sellers are listing their properties aggressively compared to what may have happened a couple of years ago in their market. Now, by pricing right, what we are talking about now is pricing aggressively on the lower end of what the market may bear because we have a lot of inventory and competition potentially in that price band. And by doing so, the property may stand out from the beginning and get the most numbers of showings, right? Some of the principles don't change whether we are in a seller's market or in a buyer's market. That is, when you're pricing it right, the market will always bear what the price should be for the property. And right now, if you want to stand out, you have to price your property aggressively and certainly make sure that the marketing efforts show that the property wins the beauty pageant.
Yeah, and I think you also, when we were talking before the shoot, mentioned timing expectations change a little bit, right?
Absolutely.
As well, and you can jump in, but you kind of basically mentioned that, when you're trying to get a price, it's not that you're not going to essentially be able to get to that list price, right? It just may take longer. So having the expectation that, 120 days on market may be more normal, right? When you look at the data in your price range versus the 20 days on market you might have been seeing a couple of years ago, right?
Absolutely. And that's why it's so important to take a look at the sold comps. It's easy as a consumer to jump on a search engine and to just look at what's currently listed, right? But this is where, talking to a professional comes in very handy, because what they can pull is going to be accurate sold comps data. And what a lot of the sold comps are showing nowadays is that sellers can still get the list price. They may just have to wait longer. And by waiting now, this may mean that in a seller's market where sellers were accustomed to having their home on the market for 10 to 20 days, now the average may mean that it's 90 to 120 days. When your real estate professional looks at those sold comps, they can take a look at what those averages are and still show how it may not have an impact on the list price. The impact is on one's mindset, if you're a seller listing a property now, of understanding that it may take longer. One of the easy ways to keep impatience at bay will be to understand the data, taking a look at the days on market and the list to sold price for the properties that ended up selling and changing hands, and being able to set up an easy communication system between the seller and the listing agent in this case to communicate on a weekly basis any potential continued market shifts, right? Across the country, month over month, inventory has gone up. So what does this mean for a seller now? It may mean that we have to continue to price ahead of where the market is headed, because if inventory continues to go up, then the pricing strategy may need to be adjusted during that period that where we're showing up with the days on market at the current listing price.
Yeah, absolutely. That communication is key, right? We were both in the room, this past week. We had some masterminds here in Austin with, a lot of the top agents and teams in the country. I think we heard some interesting things from them about their markets. We had some that were in these buyers markets, and we heard one of the interesting strategies that I honestly wasn't super aware of, just because we've been in such a seller's market for so long. You just didn't hear about it very much. Was what the reverse offers, essentially, I think was what they were calling it.
Yeah, absolutely. Well, because in a traditional real estate market, we expect that we are going to price the correct property, we're going to put it on the market, and then a lot of the times, that we pray that it sells because we priced it right in the first place. And that is not a luxury that we can enjoy when we're approaching a buyer's market. What happens instead, or what some of the strategies were that were warmly discussed last week, are that you may also go to a buyer's agent and have a conversation about a reverse offer, right?
Yeah. So my understanding was essentially, the house has been shown. Maybe I'm the selling agent. I got some feedback that, my client really liked the house, but, the price isn't right and we don't get an offer. Now what?
Yeah, now it's basically what we would call, having the reverse communication, to reach out to the buyer's agent and to understand what would cost them to make an offer. And you can do that the same way that you would, identify what potential objections were that caused them not to write an offer, and then determine a price that may want to make them move into the house.
Yeah, so now you're inducing, right? You're basically saying like, hey, we'll either lower the price by X, we'll send you this potential offer, like an unsigned offer that says, for $20,000 less than what we listed for, and see, what's the feedback we get, right?
Yeah, because it causes conversation, right? What it does, it solicits engagement, and teams are finding success with it, because it opens up the door when we're no longer making an assumption that folks will only look at a property at list price. There was clearly a reason that they were motivated enough to take time out of their day to take a look at the property. We just have to figure out what is a win-win for both parties involved.
What do you think about on the other side of the transaction? The buyers are also in kind of a new place in those markets. What did you hear in the mastermind last week? What do you think in general, like about what are the strong strategies you think maybe on the buy side in these kind of shifting situations?
Yeah, the buy side is an interesting side right now. And I think this is something that real estate teams are refocusing around, because the last couple of years, it was tough to work with buyers because inventory was so low. Now, the flip side of that is that the focus then shifted away from being able to continue to fill the buyer pipelines. And now we are here wondering, what can we do to find more buyers? Because inventory is going up, and depending on in which market of the country you are, it's a fabulous time to find motivated buyers. Think about what's happening in the SUNBELT. If you're a real estate professional helping buyers in the SUNBELT, there are options. There is a wider band that you can set up in the shopping portals for your consumer, and you can probably find motivated buyers to be able to help find investment properties or those second homes that are sitting on the market at a great price. Now, if you are a buyer's agent that is helping buyers, in the other markets where we're still seeing that, inventory is a little bit tighter, the focus should still remain the same, because, motivated buyers will need to purchase for, a variety of reasons, whether it's job or a life change, moving up because they had children, or a change in their family lifestyle. And those are going to be the folks that we can put under contract. Now, I think the story out there has been that because mortgage rates, the wish had been that mortgage rates would decrease, and yet they haven't, is that may cause some apprehension with the buyers. Yet with motivated buyers, that's not the case, because there are several ways that you can, get into a property now and, have a different effective interest rate by adjusting the way that you're looking at your mortgage.
Yeah, absolutely. So let's talk about interest rates a little bit, right? So we saw rates go up just recently. They're reached above 7% for the second time this year, right? Not what we were hoping to see.
Yeah, it creates feelings though, right, Ruben?
Yeah, exactly. Especially for us, if you're inside this industry, you see that it's not great news. So what happened? Short answer is the same thing that happened the last time, right? We had shifts in policy, and we had international reactions to that policy. Things are still changing. We've seen things come down a little bit now over the last couple of days at the end of the month. But, this really volatile environment is sort of the answer to why we're seeing volatility then transfer into things like mortgage rates. We've seen more movement in trade policy. We saw a, fiscal budget bill that's been seen a lot of debate, I would say, in the House and Senate. We've seen what seems to be like some weighing in from international places as well. There are a lot of things going on right now that are basically putting pressure on bond rates. Another thing we saw happen was a downgrade of U.S. credit by one of the major credit agencies. So, there's just a lot out there right now that's creating a lot of uncertainty. That uncertainty is then transferring into things like treasury markets. People have moved money kind of out of U.S. treasuries and into other assets. Part of that's related to trade policy. Part of it's related to, other fiscal concerns. It's really kind of hard to judge right now exactly what's going on. It's one of those things where it probably won't be till we get to the post-mortem part of it, a year or two down the road, when we can, or even maybe further, we can really dive in and kind of understand the impacts of all the changes that are happening. All these things are dynamic. They're all related to one another. They all have impacts on the same things. So it's hard to pick apart what's causing, these things to move right now, because there's so many pieces. But what we do know is, more treasury rates did rise. We saw them move up above 4.5% in the 10-year treasury. The 30-year moved above 5%. We know that's going to translate to mortgage rates. So the short story is that's why mortgage rates have gone up. We've seen them come down a bit, but we don't expect a lot of relief. We did get news recently. I think it was actually just in the last couple of days that, there was a federal court decision that may put at least a temporary stop to some of these tariffs. So depending on how that works out, that's another shifting policy issue. That's another thing that could create volatility. It could lead to perhaps a decent dip in mortgage rates as the tariffs get paused and markets react to that. Then on appeal, we could see them come back, and then, we're back and forth. So it's really all these back and forths that are going to be bumping rates up and down for the rest of the year. So I would say, what we're really anticipating is just for rates to stay volatile and probably relatively elevated. So, we're going to stay in the upper sixes probably for most of this year. We may make our way down to the mid to lower sixes, depending on just where this policy ebbs and flows to. But for the most part, we're kind of where we are. Hopefully we'll get down below 7% shortly and stay there for a while. But we do think, there's not a lot of good chance that rates are going to move down meaningfully this year unless we just kind of get lucky somewhere.
Yeah, and knowing that that is the current forecast of where rates may stay in this range, that may mean that if you are a buyer that has a motivation to make a move right now, to go ahead and understand what the monthly mortgage payments translate in this range of interest rates, to know what that's going to look like based on a 15 or 30-year mortgage. And the good news is that should rates trend in the preferred direction that we would all like to see, that's all the more good news for potential refinance down the road. Yet the current rate environment really shouldn't be a deterrent for someone who is interested in one of the markets, especially where inventory has gone up, to take a look and really consider moving now.
So final thoughts, Gabi. For me, what I kind of saw was, we've got very different markets across the country. Those necessitate different strategies. But in the end, they're kind of built on the same principles. I think, mortgage rates are out of our control, but we have to be aware of them and communicate that. I think you also hit on communication being key, right? So, for me, it was all of that. It was, communicating about strategies, understanding where the market is, and finding people who are motivated. What do you think?
Absolutely. And it's about pricing the property correctly and making sure that the communication and the marketing system that a seller may be using is top notch and that it is prepared, well prepared right out of the gate so that the property can stand out from the crowd of more inventory being the competition right now. And on the buy side, if you are a buyer right now that has motivation due to job changes, due to lifestyle changes, now you know what mortgage rates are likely going to look, as the forecast has it, not relatively unchanged. So understand what the payments may look like now, and also understand that you may have more options than you did 12 months ago to be able to take advantage of a greater range of properties on the market.
Absolutely. And Gabi, thanks for being here with us this month on the Market Update. We look forward to seeing you again next month. And be sure to tune in as we continue to track what's going on in the housing market going forward.
See you next month.